Hi, and welcome to another segment of Tax and Business Matters. I'm your host, May Watson. Let us continue our discussion on the most overlooked tax deductions. Alright, let's begin. Number 13 on our list of the most overlooked tax deduction is jury pay, paid to employer. Many employers continue to pay employees full salary while they serve on jury duty, and some require the employees to turn over their jury fees to the company coffers. The only problem is that the IRS demands that you report those fees as taxable income. To even things out, you get to deduct the amount paid to your employer. But, how do you do it? There's no line on Form 1040 labeled jury fees. Instead, the write-off goes on line 36, which purports to be for simply totaling up the deductions that get their own lines. Add your jury fees to the total of your other write-offs, and write jury pay on the dotted line. Number 14, American Opportunity Credit. This tax credit is available for up to $2,500 of college tuition and related expenses paid during the year. The full credit is available to individuals whose modified adjusted gross income is $80,000 or less, $160,000 or less, for married couples filing a joint return. The credit is phased out for taxpayers with incomes above those levels. This credit is juicier than the old HOPE credit. It has higher income limits and bigger tax breaks, and it covers all 4 years of college. And if the credit exceeds your tax liability, regular and AMT, it is partially refundable. Number 15, Making Work Pay Credit. You've probably been enjoying the fruits of this credit via reduced payroll tax withholding throughout the year. But to lock in your savings, you'll need to actually claim the credit on your 2010 tax return. This is by reducing your tax bill by $400 if you're single, or $800 if you're married and file a joint return. You'll use Schedule M to do so. The credit is equal to 6.2% of your earned income, capped at $400 or $800 for single filers. It starts phasing out at $75,000 of adjusted gross income and dries up at $95,000. The phase-out zone for couples is $150,000 to $190,000. Number 16, Credit for Energy-Saving Home Improvements. You can claim a tax credit equal to 30% of the cost of energy-saving home improvements, up to a maximum of $1,500. This cap applies to both 2009 and 2010 combined. So if you claimed the maximum $1,500 in 2009, you don't get another crack at it for 2010. The credit applies to biomass fuel stoves, qualifying skylights, windows and outside doors, and high-efficiency furnaces, water heaters, and central air conditioners. For 2011, this credit goes back to pre-2009 limits. For example, $500 maximum credit for all years with no more than $200 for windows. There's also no dollar limit on the separate credit for homeowners who install qualified residential alternative energy equipment, such as solar hot water heaters, geothermal heat pumps, and wind turbines. Your credit can be 30% of the total cost, including labor, of such systems installed through 2016. That's about it for today's Tax and Business Matters. Join me again next time as we continue to find out more about the most overlooked tax deductions. You can visit us online at www.howtodouryourontaxes.com. Once again, this is May Watson, saying, people love people who are true to themselves, follow their dreams, and encourage others to do the same. Till next time, goodbye for now.